Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody. Today guys we will take a look at the multiple currencies in one video. Just shortly we'll talk on different currency pairs because market gradually across the board is coming to many target points, not only forex market but commodities and gold market as well. So and this brings us closer to the moment where moderate retracement could start. Some market stands closer to this point, others stands a bit far, but gradually the action that we have suggested is coming to an end. So if you remember in the beginning of the week and even last week we have warned you that it's not yet the end of the major action as on the euro currency, on the gold market and other currencies as well, because major targets have not been hit. And the technical issue is very helpful when you're trying to understand what is going on in the market, because as we can see right now, some fundamental events really have appeared that have supported our view. So technicals, it's a kind of tool that you never know in advance what particular fundamental factors will support this technical view, but later they will be found and they usually appear. So you know, we even couldn't suggest that the minutes of the European Central Bank will suggest a possible more hawkish view on the European economy than it was suggesting that has supported euro currency recently. We can't suggest that situation with the China United States Treasury bonds purchasing contractions and so on. So a lot of events have happened that have supported our view that it was based on the technical, purely on the technical picture. So that's why currently some responsible moment is coming where we should be very careful. So let's start first from the Canadian dollar. On the Canadian dollar, guys, actually our setup of the Brent bond trade is still valid. Although I do not like very much the pace how Canadian dollar is moving down, so it's too slow in the current situation. We know that the Canadian dollar stands under pressure around the NAFTA free trade agreement with the Canada and United States. That Donald Trump has hinted that probably could be cancelled, this agreement. Also, on the next week will be Bank of Canada meeting, and in the current environment, it's really lots of questions. I'm concerned that probably central bank will not raise rate in the current environment. All this stuff is pressing on Canadian dollar. So that's why returning back to our yesterday's setup, well, still valid. But here I'd not like one thing. So on the 4-hour chart, we've got recently bullish grabber. It could fail, of course, but potentially this grabber suggests the taking out of this stop. That's why here you need to make the decision whether to keep shorts or maybe to close them and then open will better on the next week maybe. It will depend on where you have taken the position. Maybe it's also possible that it could fail. For example, market could form here A, B, C, patient down. This also sometimes happens. That's why if you have followed our advice yesterday and taken position somewhere in this range, so take a look at here market has touched our OP target. Recall that yesterday we have discussed this a bit steep, regardless cheaper to sell, and we said, well, market could probably hit OP target before downward action was started. It also was some washing rinse of the stops, and indeed drop has started. So potentially, as you can see here, we could get some kind of the end shoulder special on the Canadian dollar. So it could be left shoulder, head, and right shoulder is forming. So that's why make decision by yourself. Maybe you will stop, just move stops to the break even and just watch what will happen. If you do not have any position in current situation, it's a bit more risky to take the short compared to the situation that we had yesterday. Yesterday it was relatively safe because market was on top, and we haven't got the bullish grabber that we have right now on the 4-hour time frame chart. In this situation, it's better to search for something else to take in the position. So our next currency is Australian dollar. In Australian dollar, guys, situation looks really very perfect, if we could call it in this manner. On the daily chart, as you can see, the bullish grabber that has been formed has completed the target, so market has exceeded previous top. And also take a look, this minor spike up was the wash and rinse of this top. So the setup that we have discussed in our weekly research as previous weekend has been completed. Market indeed has reached this top. Don't forget, guys, that here we have also major weekly Fib resistance level. That's why here we start to watch for a possible bearish reversal. Also, as you can see, the first up is very good, and market potentially could form double repo sell. In fact, the half of the pattern already stands in place. So we have first top of the double repo, close below 3x3, close above, and creating the new top. All that we need is close below. Also on intraday chart, you could keep an eye on for some bearish patterns. For example, it could be Gartner's triple to sell or something of that sort on the hourly chart. Finally, the last currency, or better to say index, that we will take a look at, it will be dollar index. As you know, the dollar index strongly reacts on any events that happens around the euro, because euro takes more than half of the dollar index, while on the other 5 currencies tends to rest. That's why when the euro currency has jumped yesterday based on the European Central Bank meeting, the dollar index has responded correspondingly. So take a look on the daily chart. On the daily, we're coming close to our final destination point. That's actually 91.20 area. And this will be large Gartner's triple to buy. Personally, guys, I intend to keep an eye on mostly on this trading opportunity rather than on the euro currency, because on the dollar index, the overall shape of the pattern and what I see on intraday charts, and here it looks a bit clearer, and I prefer the clarity when I'm dealing with the patterns. That's why for me, dollar index setup looks more attractive compared to what we have on the euro currency. On euro currency, approximately the same, so we also have ABCD up. The butterfly is forming there as well, but now market stands with 100 pips from the target on the euro currency, and I don't know, maybe some surprises are possible there. That's why from that standpoint, setup that we have on the dollar index looks more attractive. Now, our bread and butter trade, as you can see, has worked perfect. So those who followed us with this trade, if you remember in the beginning of the week on Tuesday, we have traded this short dollar index to the downside. Actually, you were able to do this twice. So first it was on the first drop, recently it was retracement, and then second drop has followed. Anyway, currently I will be watching for this butterfly for opportunity to take into long position around 91 and 26. Take a look, the target of the butterfly coincides with the destination point of this ABCD pattern and starting point of the Gartner's triple to buy. In fact, this butterfly that we have on the 4-hour time frame chart will become and should become the triggering pattern for Gartner's triple to on the daily chart. That's what I will be watching for here. This really looks it's actually nice construction on the dollar index is forming. Also, be prepared that drop could be a bit more significant, maybe to the 91 even, to the 1618 extension of the butterfly. Why? Because here, guys, probably some stops were accumulated and some volatility could happen here. So that's why market could just, from a short-term perspective on intraday charts, it could move slightly lower, maybe to the 91 even area. But anyway, that level between 91 and 91.20 is the point where we'll be start watching for taking the long position. So that is steps that we have right now. Let's keep watching how that will turn. Probably we will not get any opportunity for trading today because all patterns that we have just discussed is standing in on some halfway to completion. So they are not have been completed yet. So it's more probable that any stops we will get only on the next week. So let's see how situation will develop. Maybe some other currencies also provide additional stops for trading, maybe Great British Pound. So let's see.